Hello everyone and I welcome you to Banking IQ, and in Banking IQ today I will discuss BIS, Bank for International Settlement, and Basel norms. Okay, so the topic for today is Basel Accords 123, and this video will be in English, and I had also uploaded the same in Hindi. So if you are comfortable in Hindi you can watch it from the link given in description. Okay, and I had also created a playlist for banking awareness videos for banking aspirants. So if you haven't watched that videos, you can watch it from the link given in the description. The link of playlist is given in the description. Okay, so my name is Kumar Gaurav, and let's begin the BIS and Basel norms. So the first is BIS, means the Bank for International Settlement. It is the world oldest international financial organization. And what is this international financial organization? So the organizations like World Bank, okay, IMF, IBRD, EVRD, ADB, AIIB. So these are some financial organization, international financial, which works internationally. Okay, and in these international financial organizations, the oldest one is BIS, means the Bank for International Settlement. It was established in 17th in 1930, on 17th of May 1930, and it serves as the banks for central banks. Like in India, the central bank is RBI, Reserve Bank of India. In US, the central bank is Federal Reserve, and in Japan, the central bank is Bank of Japan. So these are central banks of respective country, and BIS serves as the banks for central banks. Okay, now what is how many members countries are in BIS? So 60 member countries are in BIS, means 60 member central banks comprise of BIS. Okay, and the governor of the respective central bank, okay, are the members of Bank for International Settlement. The headquarter of BIS is in Basel, which is in Switzerland, and there is two representative office of BIS. One is Hong Kong and one is in Mexico City, which is capital of Mexico. So this was BIS. Now BIS has a committee, BCBS, which is called Basel Committee on Banking Supervision, and they has introduced Basel Accords. Basel Accords. Now we will talk about Basel Accords, Basel norms. Okay. Suppose you are opening a bank. You have to open a bank. So you need some capital investments. You need some capital, and the government of India has provided you the capital of 100 crore. Now you had the capital 100 crore, and now you had the NDTL. After opening the bank, you will receive deposits in both the forms, like demand and time. So after receiving deposit in both demand and time deposit, the NDTL of your bank becomes 100 crore, and in this 100 crore you have to surrender 25 crore as CRR, SLR. Okay, and the rest 75 crore you had granted as loan. You had given the 75 crore as loan, and this 75 crore after few days becomes NPA. Okay, now this money has stuck. Okay, has got stuck, and the customers who has deposited money with your bank started demanding money. Now you have to give their money back. Okay, so you will break this CRR, SLR. Okay, and you will pay them with 25 crores, but still 75 crore is remaining. So you will pay this amount of 75 crores from this capital investment, and that's where the work of BCBS, Basel Committee on Banking Supervision, starts. Okay, and that's the Basel Accords are all about. Okay, so Basel Accord 1 had decided what should be the minimum capital. Okay, or you can say that Basel 1 to 3 all decides that what should be the minimum capital for opening a bank. So this is Basel Accords. So we will discuss in it in we will discuss two more things, that what is CAR, what is CRAR, okay, and what is risk weighted asset ratio. So we will discuss in next slide. Okay, so this is a table for you, like what is risk weight. Okay, these are some risk weighted percentage which has been assigned by Basel norms. Okay, like SLR and CRR, the amount is the risk weight is minimum, that is 52%. On home loan, the risk weight has is somewhat higher, that is 110%. PSL agricultural loan, PSL stand for priority sector lending. Okay, and the agricultural loans, the risk weight is more, so it is 120% on. And on NPA it is the highest because it can be a loss asset. Okay, it is very doubtful. So the risk weight has been assigned very high, that is 192%. Now you have the NDTL of 100 crores, and you had deposited money 25 crore to RBI as CRR and SLR. You had given 10 crore as loans and 40 crore as agricultural loan, and in NPA the money has stuck, which is 25 crores. Now the risk weight amount will be calculated through multiplying this to the respective uh, risk weight percentage. Okay, now if you multiply 25 into 52%, you will get 13 crore rupee. If you multiply this, you will get 11, and if you will sum up them, okay, sum up all of them, you will get 120 crore. So this 120 crore is risk weighted asset. Okay, risk weighted asset. And Basel 1 has the according to Basel 1, the CARAR or CAR, okay, capital adequacy ratio or capital to risk weighted asset ratio should be 8% of this 120 crores, means 8% of risk weighted asset. The risk weighted asset of uh, different bank can be different. Okay, various bank can be different. Okay, there is no limit that the risk weighted asset ratio should be this, but the whatever the risk weighted asset ratio, whatever the risk weighted amount of a respective bank, the CRAR should be 8% of the risk weighted amount. Okay, so if you calculate 8% of 120 crore, you will get 9.6 crore. So this is capital adequacy ratio and this is CRAR. Okay, moving to the next slide. What is the norms issued by BIS? So BCBS, Basel Committee on Banking Supervision, has issued three norms. First is Basel 1, second is Basel 2, and third is Basel 3. So first had come up in 1988, second in 2004, and the third in 2011. Okay. So what is Basel 1? So Basel 1, the BCBS, Basel Committee on Banking Supervision, in 1988, it introduced capital measurement system. As I told you earlier, what should be the minimum capital and the risk, how to calculate CRAR. So this measurement system was introduced in Basel 1. Okay, and it was also called Basel Accord or Basel 1. And the focus of Basel 1 was on the capital risk of the bank. As I told you that what is risk weighted asset and the 52%, you had the table. Okay, so that the capital risk was the focus of the Basel 1, and it defined capital and risk weighted structure for the bank. So the table which I had already, so this table was uh, introduced by, or this the measurement system was introduced in Basel 1. Okay, so please remember. Now the minimum capital requirement was fixed at 8% of RWA. So in Basel 1 it was 8%. Okay, and in Basel 2 it was remained to 8%, but in Basel 3 it got increased to 9%. Okay, we will see it later. In Basel 2, in June 1999, okay, it's 1999, BCBS, means the Basel Committee on Banking Supervision, issued a proposal for a new capital adequacy framework. Okay, now they are talking about CAR. Okay, so new capital adequacy framework, and it was to replace 1988 Accord. Okay, to replace 1988 Accord, they come up with a new capital adequacy framework, and this led to the release of revised capital framework in June 2004. So there was a revision of Basel 1 and it is known as Basel 2. Okay, so in June 2004 the committee set up and they started deciding, and this Basel 2 come up in 2008. Okay, what are the pillars of Basel 2? Very important. The pillars are minimum capital. What should be the minimum capital required for a bank? And supervisor review. Who will supervise? Who will review that the banks are uh, working on Basel norms or not? So who will supervise them? And the third is market discipline. Okay. So minimum capital. The decided Basel 2 decided that the bank must hold capital against RWA. So this, uh, as I told you, that the 8% of 120 crore is the minimum capital. Okay, so that the minimum capital required for opening the bank was decided in Basel 1, and in Basel 2 it was made more stringent, and it is said that banks must hold capital against risk weighted asset ratio. Okay, so if you have the capital of 100 crores and the risk weighted asset ratio is about 120 crores, okay, so you have to hold 9.6 crore as the capital adequacy ratio, or CRAR, that is CRAR, and you have to hold it. And the capital should be the capital? So the capital would be 8% of their risk weighted asset ratio. In Basel 1 also there was 8%, and in Basel 2 the same has continued, means 8%. And if you talk about supervisor review, it is the process whereby national regulators, like in the case of India it is RBI, so national regulator ensure their home country banks are following the rules or not. So national regulator should ensure that their home country bank, like if you talk about home country, our home country bank, SBI, SDFC, ICI, okay, Bank of India, so these are home country. So national regulator like RBI will ensure that these banks are working or are following these rules or not. Currently, the banks of India are following Basel II norms, and the deadline is 31st of March 2019, and till 31st of March 2019 all banks have to follow Basel 3 norms. Okay, after this deadline the RBI will ensure that the banks are following Basel 3 norms or not. Okay, so the deadline should be in your mind. The deadline is 31st of March 2019. It had been extended for 1 year. Earlier it was 31st of March 2019, but it got extended. So now after Basel to Basel 3, so Basel 3 come up in 2011 after the financial crisis of 2008. So the world was hit by financial crisis in 2008. So the committee thought that there is need for the further strengthening and further working on the accords. Okay, so the need for fundamental strengthening of Basel II framework had become apparent. Okay, and the Basel committee issued fresh principles and guidelines for sound liquidity, risk management and supervision to protect the bank from unforeseen condition and from going bankrupt, insolvent. They issued fresh guidelines. Okay, and in July 2009 committee issued further directive to strengthen the Basel II capital framework. So it was in July 2009 when the Basel committee, BCBS, had issued further directive to strengthen the Basel II capital framework. Okay, and in September 2010 group of governors, as I told you that the member country of 60, okay, there are 60 member country in BIS, and the participants are the governors of the respective central banks. Okay, so the group of governors and the head of the supervision announced higher global minimum capital standard for the commercial banks. Okay, now this minimum capital standard was increased, it was increased further higher, and it was made more stringent. Okay, and if the bank doesn't follow these norms, they have to go through PCA, means prompt corrective action. Okay, so they have announced higher global minimum capital standard for the commercial bank, that you have to maintain a capital amount. Okay, you have to maintain a minimum capital amount. Okay, and thus the overall design of the capital and liquidity reform package is referred to as Basel 3. So these total higher minimum capital and higher capital adequacy ratio and capital and liquidity reform package is referred to as Basel 3 norms, and it come up in 2011. Okay, if we talk about capital to risk weighted asset ratio in Basel 3 norms, it was increased to 9%, means it was increased by 1%. And if the RWA, risk weighted asset ratio, is 120 crores, the capital would be 10.8 crores, so it got increased. Okay, and now what is this LCR, means liquidity coverage ratio? So suppose the banks in India is working on Basel 2 norms. Okay, so they have the capital or the CRAR of 9 crores. Okay, now when they have to go to implement Basel 3 norms, they require this 10.8 crore rupee. Okay, and now they have only 9 crores, so this 1.8 crore is needed more. Okay, so this 1.8 crore is LCR. Okay, means liquidity coverage ratio. Okay, so many banks are are being recapitalized by the government of India, and this is recapitalization. Recapitalization means when the government of India infuse their capital in the banks, okay, to strengthen the weak banks, is called recapitalization. Okay, so this was Basel Accord. I hope you had understand it. Okay, so please like the video, please share the video, and please subscribe my channel if you haven't. Okay, and please tell me how this video was. Okay, thank you for your time. Have a nice day.